Welcome to the Daily Departure from Skift, your essential daily briefing on the business of travel. One story, one powerful insight, every weekday straight from the Skift newsroom.
Marriott CFO on preserving citizenM's innovative DNA. Marriott International's Chief Financial Officer Leanie Oberg sought to allay concerns about potential changes to citizenM's distinctive identity following Marriott's $355 million acquisition announcement Monday. Oberg emphasized the hospitality group's intent to maintain the brand's operational independence. We've really demonstrated through a number of acquisitions that we are absolutely able to take a unique brand that we acquire, build on its tremendous reputation, and then grow it in our system, Oberg said. In an unusual twist for a hotel brand acquisition, Marriott will give citizenM's current leadership team continued wide sway over operations. The hotels will remain primarily operated by the current owner under a franchise agreement with Marriott. The real estate ownership and management is overwhelmingly staying with the seller, and in that case, we would expect that team to continue to operate the hotels and not be joining Marriott, Oberg said. As Marriott weaves citizenM into its 30-plus brand portfolio, Oberg said it plans to preserve the brand's operational flair, technology-driven guest experience, and signature emphasis on art and design in its lobbies, while plugging citizenM into Marriott's global growth and loyalty engine. Protecting citizenM's brand DNA, citizenM's emphasis on art, design, and highly efficient use of space will also remain a defining feature of the brand, the Marriott CFO said. It's a very attractive component of the overall feel of the brand, Oberg said. We would expect to continue to invest in and maintain that design philosophy. citizenM had already been experimenting with new approaches to loyalty, offering a paid subscription for discounted rates and co-working access rather than relying solely on points. Oberg explained that while Marriott doesn't expect to make immediate changes to citizenM's loyalty model, the company is eager to explore how its innovative elements could influence Bonvoy's broader strategy. We really want to take the innovative DNA that is in citizenM and really infuse that, frankly, as part of how we think of all of Bonvoy, said Oberg. Similarly, citizenM's proprietary technology platform, which controls key elements like in-room tablets and check-in kiosks, will be preserved. We're confident that we'll be able to have these hotels enter the system without the loss of that terrific in-room experience, Oberg said. She pointed as a model to Marriott's integration of AC Hotels, a Spanish brand it fully acquired in 2019. It has scaled up AC from a few dozen properties to 244 hotels, with roughly 150 in the pipeline. Balancing growth with Moxy and other brands, citizenM joins a growing portfolio of lifestyle brands at Marriott. The new brand has the most overlap with Moxy, whose guest rooms are similarly tiny and whose lobbies also aspire to attract a hip crowd. Yet while citizenM and Moxy both target urban markets and younger travelers, Oberg said the brands cater to different customer and real estate investor needs that will allow both to flourish without cannibalizing each other. The Moxy focus is a bit more playful and has a different public space feel and spatial identity, and the rooms are designed a bit differently, said Oberg. When you look at citizenM, it's clearly known for a really strong, genuine service, tech-savvy hotel experience, and a highly efficient use of space, and a focus on art and design, she said. While adding citizenM's existing properties is valuable, Oberg stressed that the bigger opportunity lies in future expansion. The most important thing that we think about here is the opportunity for future growth. While certainly we appreciate adding these hotels to our system, and we're very excited about that, when we think about it more broadly, it's the opportunity to grow citizenM globally adds extra excitement, she said. Marriott sees strong demand worldwide for lifestyle and affordable luxury hotels, and Oberg believes citizenM's distinctive model positions it well for accelerated global development under Marriott's umbrella. Although Marriott has demonstrated success building brands organically, such as its launch of the new mid-scale Studio Res brand, Oberg said strategic acquisitions like citizenM complement that strategy, analysts' views. A note from global equity research and brokerage firm Bernstein highlighted citizenM's strong guest satisfaction scores, averaging 4.5 out of 5, despite its pricing between the upper upscale and upscale tiers. The analysts see the brand sitting above Moxie in the portfolio and commanding higher rates because its slightly higher end and more formal aesthetic appeals more to corporate travelers. Bernstein analysts noted that citizenM's established presence in major U.S. and European cities reduces the risks compared to building a new micro-urban brand from scratch, an approach that has challenged rivals like Hilton with its slower-growing motto brand Citizen investors staying involved. citizenM opened its first property in 2008 under entrepreneur Ratan Chadha, building its reputation around smart, tech-forward hotels designed for the frequent, design-conscious traveler. Singaporean sovereign wealth fund GIC took a 25% stake in the company in 2019 in a deal that valued the company then at about $2.3 billion, including debt, with the other main stakeholders, namely Dutch pension provider APG and founder Ratan Chadha's investment firm. Analysts at Bernstein called Marriott's purchase price compelling for a lifestyle asset, valuing citizenM at less than 12 times stabilized annual fees.
That's it for today's Daily Departure. For more insights into the business of travel, follow us on your favorite podcast app. And if you like what you hear, leave us a rating or a review, and we'll see you back here tomorrow.